Gold and silver meltdown $10 trillion, the biggest liquidation event in human history. The change in silver alone is the biggest change in 46 years since 1980. Now, rumors are swirling that all of these software glitches and ceasing of purchasing triggered algorithms that allowed China and banks to raid the Comex. Either way, you guys, if you've been watching our channel, you may have purchased silver today just like I did. So if you're wondering how I purchased silver today, stay tuned for that segment. But here's where we're going to start. Starting with this X tweet from Bark, 10 trillion wiped out from gold and silver in 24 hours. This is the largest liquidation event in human history. This is not natural. This is 100% market manipulation. Now, bull theory is worried that this is just beginning. Silver has just entered a historic danger zone. Silver has dropped 32% from its peak in the last 2 days, and historical data suggests this move may not be over. And we're going to talk about that here in a minute. Before the drop, silver's monthly RSI reached 95, the second largest reading in more than 60 years. This level has appeared only twice in modern history, 1979 to 1980 and 2009 to 2011. Now, it's pretty evident that there's market manipulation because Shanghai silver premiums hit a mind-boggling, and this is not at the closing, but $44 an ounce. That's up nearly 100% in just 1 day, meaning that, I don't know, I thought about flying silver out to China, to be honest with you, because it's so much more expensive in China right now. Now, as you guys can see here, the market is closing at about 85.25. Now, I want to remind you guys, though, even though it's closing at 85.25, this has rocked back and forth going down to $74 at one point today, all the way down from 118. That is a $44 swing. Now, again, what we've been saying is you buy slow and you hold long. And so I found my buying opportunity right at the very bottom right there when spot was about $74. I try to purchase about 10 ounces of silver per month. You guys know that. So I took the 10 ounces I was going to purchase in January and in February, and I purchased 20 ounces at $74. Counting premium, I'm in for 20 ounces at $79 total. So let me know below if you guys did that as well, because we've been saying buy slow, wait for a pullback. And if you did buy today, just like I bought today, I want you guys to comment below and tell me what you guys got in for counting premium. Even though the futures are at 85.25, the physical price, known as the silver spot price, is at 86.61. But don't forget, when you purchase physical silver, you have to pay an entry fee, which is called a premium. And right now, looking at a basic 1 ounce silver round, that premium is roughly $9 for a total of $96.62 to buy a round right now. And again, you guys, I'm in at $79 for 20 ounces. Now take a look at this settlement gap right here. So Shanghai, China, it ended, physical metal ended at $123.21 an ounce. Okay. We ended about 101, but we're sitting at 85. So right now we're at roughly $38 premium right now. So China, you guys think that China's going to want to buy your metals right now? I think so, over the weekend. Now, today's events has caused the gold to silver ratio to explode upward to 57.31 ounces of silver to equal 1 ounce of gold. And you can see that that ratcheted up today. Now, Mitch, before we talk to mom and pop about what happened today and why this crazy volatility, I want you to talk to them about the Fibonacci ratio and how this is all just potentially normal volatility. And instead of having that 10-day flash crash, you know, the 2 legs, 10 days, we had that in just 1 bar today. Can you explain to mom and pop, first of all, what's going on with price, the volatility, and talk about the dollar cost average?
10 bars, which in this case would be 10 days, 2 legs, 1 leg like this, pull back, another leg. So it's 10 bars, 2 legs, sideways to down. And in essence, that is what happened in 1 day. So it appears that this is an extreme down day. However, it's not what it appears to be. So let's look at the chart. What I've done here is I drew a Fibonacci pullback, and that's what this is. So it's interesting that from the low to the high is a parabolic move. When parabolic moves occur, from a technical perspective, you can expect a 0.618% pullback. You can also expect it to test prior swing lows. Well, lo and behold, look at what happened. And this is not coincidence. 0.618 Where did it end? It came at 0.618. There was a little bit of an overshoot, but where did that overshoot go? It went to the prior swing low. This right here, if you go back and look a couple days ago, was expected. We said it was expected. Why? Because it was within inside of the cone based on the volatility. Over and above that, let's look at the implied volatility rank right here. So my arrow is down, and it went up just a hair from 133 to 145, give or take. However, the volatility only went up 3 points. It was at 83, and now it's at 86. This was expected. It wasn't necessarily expected in one day, but the pullback itself was expected. You have, in essence, inside of this bar, 10 bars, 2 legs, sideways to down, because of the parabolic nature of what had happened in reality within the last 10 days. All that's happened is we came back to where we were. It's testing prior swing low.
Mitch, can you talk to the viewers about how we have a price ceiling now, and with that price ceiling, we can actually form targets as well?
There's a lot going on in the marketplace, and most of it is noise. But the point of the matter is, what has that noise delivered for us, including the parabolic nature of what has happened? There's your ceiling right there. So technically speaking, you could have what's called a spike and a channel, and this can just go in this channel a week, 2 weeks, 3 weeks, doesn't really matter. If it's in the channel, it's in the channel. It can flop up and down. That's why these expected moves are right here. However, next go around, when it breaks out of this high, all-time high, you can expect a double up. If this is the range from here to here, you can expect a doubling of this range, which will put you up pretty close to, let's go 170 to 190, somewhere in that range. The point of the matter is, it's all technical. And what happens when you see these down moves, there are a lot of players that just simply say, I don't want to buy now. Now, those are sovereign wealth funds that are also playing in the market. So they simply stop buying, and the algorithms kick in. So one algorithm feeds the other algorithm, and that's why you get these massive down bars.
So, Mitch, I bought 20 ounces today. I got in counting my premium at $79. I was happy with that, to be honest with you. I've been waiting for a pullback so I could invest a little bit more in silver. So I got that today. I was happy with that. You know, that same product that I purchased is $12 per ounce higher than when I purchased it. So can you talk to mom and pop now about dollar cost average and about how this could be an opportunity to slowly get into the silver market?
For quite some time, I've made the comment not to jump in full bore on anything, and that scaling in is the right approach. This is exactly why scaling in is the right approach. Most people can't time the market. Most people can't trade intraday. And that's why we keep saying, get the education. Go to Tasty Trade on the options so you don't have to trade intraday. You can use options. You can hedge these moves. You can participate in these moves. Or if you like trading futures, you can do that too, but you need the education. Scaling in is the appropriate thing to do. And on the overall reaching point of what we want to talk about here, one must understand that what exactly changed between yesterday and today with regard to the debt level associated with the US national debt? The answer is nothing.
Now we're going to talk about some of the rumors and some of the possibilities of exactly why this has happened today. So first of all, before I go into those rumors, I want to remind everyone of this X tweet from Zero Hedge stating the truth that China will gladly buy all of the silver you have to sell. The Shanghai premium hits a mind-blowing, it's actually higher now, guys, $29 an ounce. Again, it's actually higher now. That's up 50% in just one day. Don't forget that. Don't forget the manipulation that's going on here. Also very interesting is we had multiple software glitches, and I haven't even got to the Comex glitch yet. London Metal Exchanges resumes trade after technical glitch. Now, Chris Martinson is warning that there are going to be a lot of these technical issues going forward. And actually, here's another one right here. As HSBC suffers temporary system shutdown, stopping services in Hong Kong. Now, here's an interesting rumor that's swirling right now, stating this: CME silver margin. Yesterday, when I looked at the CME silver margin, which we covered, I believe, I could not believe my eyes. I searched on the web Nobody had written a word on the subject. I searched it again Friday and bingo. With such margins, the Comex forced all the traders to get out of their contract. This explains what is happening today. Silver paper is dying. It's a form of reset of the Comex. Keep your physical. Also, Nikki points out, like, what the heck, CME? Another software glitch or some other glitch, right? All stacked against mom and pop. How has CME not triggered their circuit breaker? So their circuit breaker is supposed to trigger and halt and freeze the sale of silver after it's down just 10%. You guys, it was down 20% and then over 30% today, and there was no circuit breaker. CME was supposed to do that. It's literally in their rules that they are supposed to trigger a circuit breaker, but we're just going to add that to another software glitch. This is an interesting X tweet right here. The Comex is going out of business in March regardless. So they crashed the price of silver from $120 to as low as they could criminally do. If you had 2 months to live, would you wait for your last faithful day, or would you go out with a bang? And they're also pointing out that Comex paper silver is at $80, while Chinese physical silver is $120. Also interesting here, Comex gold deliveries go nuclear. 20,484 February gold delivery notices issues. Mass gold price slam fails to slow avalanche of delivery notices on the first notice day. There's Deutsche Bank, which issued 2,387 notices. JP Morgan almost issued 12,000 notices, while they stopped about 8,000. UBS issued 2,379 notices for a total of 2.05 million ounces of gold notices issued on the first notice day. Doesn't sound like Comex is doing very well. Now, it looks like US silver trade was correct, as it is official. Australia's Perth Mint has suspended sales. I thought that was very interesting. So they were right. And they're saying that they suspended sales. Okay, so we have decided to pause taking wholesale orders from this coin from today until the 23rd of February. That's interesting. And yet the prices just plunged 30% and there's not manipulation. That doesn't add up. I thought this was interesting. If every single bank short silver didn't cover at the prices seen today, they are insane. Every bank should go long now and be ready to pump up silver to $500 because they exited their position and they're not going to go bankrupt, right? Honestly, I love this tweet right here. There's a little bit of conspiracy. Maybe there is, maybe there's not. Mitch is going to give his own thoughts here, but Mitch, this is what this says. I love this. Okay, this is interesting. If China raided the Comex today, the glitches of the servers and all this might have been hackers who manipulated the pricing algorithms for trading towards a crash. If you match the orders different, you can manipulate the price wherever you want. This would also explain why HSBC Hong Kong shut down as well, because the Western metal system could have become infiltrated this way. The West wasn't able to solve this problem in time, and they just let it happen because they can't say that China hacked their banking system and they can't do anything about it. And that the reason is that they want the silver. So, that's interesting, Mitch, because we kind of talked about that. So rumors spiraling, right? All these software glitches. Where's the circuit breaker? Can you just tell the viewers what you think might be going on? Can you put an emphasis on the power of those algorithms and also an emphasis how a lot of these banks, they just want our silver? What happened today, really, Mitch?
It's a cacophony of a lot of people, including institutions and sovereign nations, participating in the market. Is this manipulation? Well, to a certain extent, yes. However, to another extent, given the volatility of all these participants, not necessarily just the price, but it's the volatility of the participants trying to balance their books. Well, I have to buy physical, I have to sell physical, I can't afford to inventory, I can't afford the carry of the inventory. I don't want to deal with small orders. I don't have the staff to deal with small orders. I'm not sure what the market is doing. So it's the combination of all these things happening simultaneously. But think of it this way. If you had the opportunity back in April of 2025 to go and buy oil, when the oil market crashed in the West Texas crude down to $37, would you have bought a boatload if you knew what you were doing? Look at how much money you would have right now in less than a year if you bought a tanker of oil when it was worth, according to the futures, almost nothing because the market crashed. Was that crash a manipulation based on what they were saying was COVID? Or was that crash pure manipulation to drive the values down for the big boys to go buy the tanker loads? Well, what's the difference between that and what we just experienced today? It's noise. Best not to be participating in the noise and stay the course of scaling in because of the debt load.
Yes. And Mitch, do you find it suspicious that there were multiple software glitches and that those glitches could have triggered these algorithms? Not just the glitches in Hong Kong, but also CME didn't trigger their circuit breaker. They were supposed to do that. Very suspicious, okay? All the algorithms start saying sell, sell, sell. So aren't you just a little bit suspicious, Mitch?
Yeah. Suspicion or coincidence, you be the judge. I will tell you that those stops not stopping is going to be lawsuit heaven for some litigators. They're going to go after that because that's what those stops are there for. That's what they're there to do. The fact that it was happening globally, could this have been a forced, simply multiple sovereign nations on our futures market saying, yeah, we're not there to support this. We'll drive it down. Well, when they drive the price down, they scare the weak hands. The weak hands exit wrongfully. This is not a game for short-term traders because of these type of problems. This is a game on the physical for the long haul. That's what's important. All this other stuff is just the big boys, the sovereign nations having fun at the expense of everybody else because that is what markets do. It's called price discovery. For better or for worse, it is what it is. And everybody's saying, well, it's this, it's that, it's this, it's that. Nah, it doesn't matter. There's a lot of participants. They've all failed. When you have those stops like that and those stops aren't there to protect, that's going to be a problem. So that's a whole other problem for the CME.
Let me just do a quick recap of some of the other rumors and events that happened today. Wilmar tweets, warning, the next 24 hours will be giga volatile. A U.S. government shutdown is basically confirmed at 12 a.m. this morning. So in a few hours, this is supposed to happen. It's just more debauchery, right? It's 86% chance. Paychecks are going to get delayed again. Contracts, approvals, data, they get to keep kicking the books and they keep kicking mom and pop in the pants. Now, most people were blaming Trump's pick for new federal chairman. Trump names Kevin Warsh as Fed chair nominee. Senate discusses government shutdown deal. Now, again, people are like, oh, you're going to get Kevin. Well, then the market is going to crash, right? That's what happened, right? I mean, that's what the mainstream media is selling mom and pop right now. So, of course, some of them are out selling their silver to banks into China right now. Now, before ending, I want to listen to just one more video of discussions about metals.
They created it right after we went off the dollar, gold backing. They needed immediately to keep gold suppressed. What happened in 2025 in the silver and the gold markets and the Comex, again, is meant to be misunderstood. Even if it was on the headlines, you wouldn't want to read it because it's too boring. All it came down to, I'm simplifying dramatically, insulting many of your Comex experts, is there wasn't enough allocated, segregated post-Basel III gold and silver on these London and New York exchanges for them to even do the shorts they were used to being doing. If you can't short, you can't manipulate the price. Very simply, that means there's actually a hint of free price discovery in gold and silver. So as this debt crisis and currency crisis collided and pushed gold up, the Comex wasn't there to put it back down again. And that's what was really unique about the price moves in 25. And look, I've been a trader for decades. I've never seen the lease rate in silver, for example, go above 2. It went to 5. The Comex in the gold market this summer, literally, it's 1% stands for living. It just gets levered and rolled over, levered and rolled over. That's the Comex. This summer is 100% delivery for gold. The counterparties on the Comex wanted physical gold. That's extraordinary. It's extraordinary. Again, for those who don't know the Comex, it doesn't mean anything. But what that signifies is after decades of price fixing, the counterparties would just rather have the gold, again, because they see the rain. They're building their arc. They have to. So what can the Comex do? And what I think, and the silver markets too, they've tried to manipulate it. They don't have the silver, so now they push up the margin prices. They're trying to come up anyway. Maybe they'll have limit orders. Maybe they'll make it sell only. But what that is saying is they're running out of bullets And when that happens, and I think, and this is just a theory, is I think they're going to have a failure to delivery on the Comex and silver. And what that means, again, this is wonky to anyone else. The Comex is supposed to be able to deliver the counterpart of the silver if they want to take it out. It's not designed for that. It was designed for leverage.
Not designed for a run.
Not for design. And it's like, what's going to happen is going to be a cash settlement only, not an actual delivery. When that happens, that's effectively saying the Comex has failed. It's what it's contractually obligated to do. That a futures contract is not a contract at all. It's a cash settled bogus contract.
Mitch, nothing has really changed today except for me buying opportunities. Did you buy today? How are we going to end this one today, sir?
Well, I have standing orders in. I don't want to give those numbers because I don't want people following me because I could be wrong, but I'm scaling in. So the point of the matter is I have standing orders. Did anything really change? Did the U.S. debt position change today? Can the U.S. government literally write a check to reduce the principal of the U.S. national debt today? No and no. So what changed? Nothing. We ended up at a Fibonacci level. Is that coincidence? You be the judge. The point of the matter is, Warsh is a smart guy. He was trained by Stan Druckenmiller. His cloth is Wall Street. His belief, as you just heard, is that of precious metals. Could it be that the market is literally being pushed down by those sovereign wealth funds that just simply say, we're going to shut the tap off on the buying. We're going to scare the children. And then we're going to come back in and start buying. We're going to take the silver. And because the world is going to have to deal with this debt level. By the way, it's not just the United States debt level. That's the point of this. Many of these sovereign nations that are participating in this, they have the exact same problem because coincidentally, our Federal Reserve shoved a bunch of garbage around the planet. And now that garbage is beginning to stink. And that's in the form of debt. So therefore, those countries themselves have to shore up their true valuation. Well, does that mean that gold repricing and silver repricing is going to occur as a percentage of, let's call it M2 plus US national debt plus unfunded liabilities? Where are they going to do the valuation in order to determine how to handle the debt, given Warsh's position and his proclivity towards trading of metals? That's my bet.
Very interesting. Well, having said that, one more time to the viewers, if you guys did purchase today, if you're a true stacker and you understand that you buy slow and hold long, then you probably did buy today. And I'm interested to hear, comment below, let me know once again, what did you buy out today counting the premium? Did you beat me? Did you get in under $79? I hope you did. That's what I did. Super blessed. I feel positive. I feel great. I understand the manipulation. And if you're out there just trying to figure the manipulation out on your own and reposition, you guys already know we wish you luck and we hope you win.